The truth of the matter is, so far we have had very significant reductions in non-performing loans. Our current NPL ratio is at the lowest since 2008, and we have had, again, a significant reduction this same quarter. Having said that, it's obvious that the economy is going to be moving south, and hence the likelihood is that at some point we will have an impact in non-performing loans and loan losses. Indeed, that is a concern. I think it's something that we should be in a good position to confront, but obviously it all depends on how the scenario eventually develops.
Will any benefit that you get from leaving negative interest rates behind outweigh some of the risks that you've just outlined, Gonzalo? And what is your future profitability potential from higher interest rates?
Well, we're currently with an 8%, give or take, return on tangible equity. Our target for 2024 that we set a couple of months ago is to be at 12% or more. That means moving below our cost of capital to slightly above our cost of capital. Certainly, at this stage, the economic environment is actually making it a bit more difficult for us to get there. And certainly, if there's a big levy imposed on us, that's going to be directly hitting our net income targets.
Gonzalo, there are self-help measures you can do as well, regardless of what's going on a broader level as well. And you're continuing to do that, as indeed are the rest of the Spanish banks. I note with interest between 2010 and 2021, the number of Spanish bank branches fell by 55%. But that process has further to go. You want to be an omni-channel bank. You want to compete with some of those financial institutions that you mentioned that are not subject to the same regulations that you are as well. How's that process going for you, sir?
Well, we made a major progress on that as a result of the merger with Bankia, which we announced in March, or we closed in March 2021, just a bit over a year ago. And as a result of that, we've actually consolidated the branch network of the two organizations into one, meaning there's as many as 1,500 branches have been closed during the last 12 months. It means that we have now, I think, the right platform, the right size of our platform, including people, including branches, and including, obviously, digital channels to do the business that we want to do. So basically, the message is the job we had to do is done now for us, and we're in a very good position to grow the business and give the right level of service to our clients, as proved by the results this quarter.